This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. And if you've watched my videos for any length of time, you'd realize that I spend a significant portion of my time going through the 18MA. And I like to use the 18MA in conjunction with the 40, and mostly what I use the 40 for is a support system for the 18. However, I do want to make mention of a specific pattern that I do talk about in my course that is related to the 40 and not the 18. So let's go ahead and get into this because I do think it's a valuable thing, especially when the market goes through a deeper correction phase, something we want to be on the lookout for. So let's go ahead and do that. Now, just so you know, if you have an interest in starting out, maybe even before you buy the course, I would suggest starting with the book. I've made it at a pretty inexpensive level, just as an entry level in an ebook format so you can get a better feel for what I'm doing. If you have an interest, you go ahead and go to rabilstockresearch.com/book. So if you notice, I just have a single chart up of the QQQ on a weekly basis. Now, normally I like to look at multiple time frames, but just to get this point across, I want to show you this specific pattern in one time frame, and I'm going to show you in multiple charts. So I'm going to start with the QQQ because what I want to explain here is, and I'm using this in conjunction with the RSIs because one of the trades and patterns and setups that I've discussed is when we have a trend in place and RSI 20 is holding above the 50 level. This is the 50 level, okay? And we get RSI, the gray line, the RSI 5 to dip down under 50 and give us intermittent buy signals, okay? And when that happens, we want to take advantage of the fact that the trend is still positive because the RSI 20 is above 50, while the overbought, oversold oscillator is getting back down to neutral. Now, it's a totally false thought process in a trend to expect even a short-term RSI to get oversold, okay? When you're in a trend, you don't typically get deep retracements that take the RSI, any kind of short-term oscillator, down to an oversold level. If you can just work off the neutral, and I say down under 50, that is a indication of that I think is pretty important. So we had 4 of these in a row, and if you noticed, each one of these took place right at the 18, which was still rising, okay? Now, once we got this big drop off this peak and we got to rally back up, again, we failed at the 18, but it was the reverse of that pattern. You see how this RSI 20 basically failed? It got right through it, but maybe by like a point, while the RSI 5 got well above the 50 level. That's the reverse signal, and we happened right at the 18. But look at what happened after that. We get this big move to the downside, and then we get a really strong rally that goes through the 18. But we get the same signal. The only difference is the RSI 5 actually goes to overbought. Remember I said that this is very rare? You're not going to typically have that. Now, there's a couple of things you need to be on the lookout for. Number one, is the 18 rising when that happens? If we get up to the 40 and the 18 is rising, then we shouldn't be expecting another decline phase, maybe a pullback to the 18 before we turn up. But if we have the strong enough rally that happens quick enough that takes this to overbought but doesn't take this over 50 in any dramatic fashion, I mean, sometimes it'll bleed through a little bit, but if it's just like this, where it's like 51 or 52, it's still a relevant signal because this is extremely overbought. And now we're hitting the 40 line, which is declining. All right. And if you notice, the 18 is still declining here. So we have a trend based on the moving averages. We have a declining 18 below a declining 40. And now we've rallied up to the 40 line instead of the 18. And I know a lot of people shy away from this trade, but I'm telling you, in the right circumstance, we want to be on the lookout. This is a bear market rally, right? We want to be on the lookout for that. But also look at way this played out here. We came back to the 40 during the bull market pullback, a correction in the an ABC correction. In the uptrend, look at this oversold reading while this stayed clearly above the 50 level. Do you see that signal? This signal happens at the 40. When you get this oversold, it's almost always going to happen at the 40 and not at the 18. All right. So we want to be on the lookout for that. Now, in this case, this was starting to kind of maybe creep over. It was more of a flat line. So I really like this pattern. When this is rising, we get a pullback to that. We get a deep oversold, and this is flat. If you get that, we want to go look and make sure the ADX confirmed this up move here and showed a lot of strength. I'm not going to show you that. This is something that I've talked about with my subscribers a lot. We look for this pattern. We're on the lookout for this type of correction where we get a deep oversold. The 40 is rising, this is flat, and we've had strength going into the move before the correction started. So this is a pattern at the 40, not at the 18. We just want to make sure the 18 isn't clearly rolling over. So let me just give you a couple more examples. Look at this deep pullback in LRCX. Now, this got way overdone. This came back to the 50 level, okay? Now, we can do the same thing here. Now, it didn't quite make it to the 40 here, but this clearly got overbought and this stayed at the 50 or lower, right? I mean, you're going to get these regular intermittent sell signals at the 18, and these happen more closer to the 40. In this case, it didn't quite make it to the 40. But we want to be on the lookout for this, especially when the overall market is kind of deep and oversold, and we're looking for the stocks that are holding up and showing strength. Because I can tell you there weren't that many doing this, but there were enough. Look at another one, and this is in industrial space. This is a pretty clear and very limited pullback. You see how this didn't pull back that much from the high, but it came back to the 40. This was still clearly rising, and we got oversold, and this stayed above. Want to be on the lookout for this. Look at DBX, a tech stock. It came down on its earnings, and look at what it did. It found support right there at the 18. Look at how this got oversold. And this was well above the 50 mark. It's almost so the way I want you to think about it is like a rubber band being pulled back, right? And then when someone lets go, it snaps back. That's essentially what this is doing. You could almost think about that like a rubber band. And as soon as it starts to cross back up, it's going to snap back to the upside. So we want to be on the lookout for these whenever we can. Here's another one in the basic materials. So I'm showing a basic materials. I showed a tech stock. I showed an industrial and another semiconductor. Here's another one that, again, had a little mini ABC. It doesn't look like a deep correction, but you see how oversold this got on a 5 RSI basis while the trend came back to the 50 level. So that's a lot different than what happened here. We were watching for this because this was so strong. I mean, this was a nice signal. It was a great little trade. This is another kind of form of a trade where you're taking advantage of an overdone snap to the downside where this gets way overdone, but the trend is still positive. Notice how the 18 and the 40 are rising in these patterns. Okay, I'm pretty much across the board. The only time every now and again, like what we happened in the QQQ, is you'll get a flat line for the 18. And as long as it's not fighting the trend, it's something that can be traded. So be on the lookout for this. And again, it plays both ways. All right, we want to be on the lookout. So if the market, the reason why I'm bringing this up is that we could be getting these kind of extreme swings, and going into the end of the year, if the market's rallying into the end of the year, you want to find anything that's really not been participating and is actually doing the opposite on the sell side. And you can play these and you don't have to play them. You could have just played this up to this prior high. You could play it for a swing trade on a weekly, right? There's nothing wrong with swing trading off a weekly, especially with the little narrow range bar like that. So be on the lookout for these. I think they're a great trading pattern. And what you would end up doing is you could go down to the smaller time frame. And in some cases, I don't even use a daily because it won't show up on the daily. You might even go down to like an hourly chart and look for a clear reversal of the pattern. And when you get that, you can do that right off this low and play that for a trade to the upside. So that's how I would go about using this, something to be on the lookout for. But use that 40 in this way, and I think it'll be very helpful. If you like this content, hit that like button and also subscribe. Everybody have a great week, and let me know if you have any questions or comments. Thanks.